What's happening, Broke to Breakthrough family? It's your host with the most, Michael T. Ragland here, and today we're going to be jumping in and talking about my favorite topic, which is how to find stocks. I know all of you watch videos where people are probably like, hey, these are the next 3 stocks that are about to break out so you can make bazillions of dollars, and you're probably thinking, well, how can I find these stocks? That's what this video is all about. I'm going to show you how to do your own research so you can beat the market to the punch. Let's not waste any time. Let's get right into it. And the very first thing that I want to do is to get a good overview of the playing field from a macro or top-down perspective to know what's moving the market. And for me, there's no better thing to look at than heat maps. The particular one that I'm using now is free, which is at FinViz.com. That's, you can see it right there, FINVIZ.com. And I know it looks crazy, but if you really look at the screen, all it is doing is telling us that, hey, the green sectors are the ones that are performing well, and the bigger the squares or rectangles in the box, the stronger that company is for driving that particular sector. So if we look at tech, we see Microsoft is up 1.31%. We got Nvidia there as well that has this huge block, AVGO, which is Broadcom, which is an Nvidia competitor. Same thing, AMD, Qualcomm, so on and so forth. And if you look closely, you can see these sectors. So that's our semiconductor sectors. Here are our leaders here. We're not gonna read everything. So I look at that and that lets me know just by quickly looking at this, what's happening in the market as a whole. It's like, hey, the market is performing strong. The S&P 500 or the SPY, SPX, whatever you want to call it, is actually up. And I can go to the chart and look at that, or I can look at a heat map. I do both, but I really look at the chart when I'm looking for entries for trading. For investing, I like heat maps because it's telling me not only the sectors, but the individual companies that are doing well too. One quick tip I'll give you when I'm looking at stuff like this, I like to look at the underperformers in particular sectors that are doing well. We know that Nvidia has had its run, and Broadcom and Qualcomm are competitors, but AMD isn't doing so great. I might go do some research on AMD and seeing if this is a buying opportunity because it's down. Remember, we want to be greedy when others are fearful. Shout out to Warren Buffett. But we're not going to spend too much time on this heat map. I know what you guys came here for is to actually learn how to screen for those stocks. But before you do though, I always want to look at this heat map so I know which direction the market is headed in. So first things first, we can see that there's 9,546 stocks being tracked by FinViz. I mean, that's enough to find you some winners somewhere. If you know how to narrow it down, you definitely don't want to be sifting through 9,500 stocks. But this is just for everybody that says that, oh, I missed a wave on Nvidia or Apple or whatever. There's no other stocks out there. Yeah, they are. There's almost 10,000 stocks out there where you can catch on as well if you know what you're looking for. And that's what this video is all about. I'm going to go here and I'm just going to click on all. And just to quickly go over, you got descriptive, fundamental, technical, ETFs, and all. The first thing I want to change is US only. And that's going to knock us down to around 8,300 stocks. The reason that I do that is that I just find with stocks from other countries, I'm not super comfortable with their balance sheets and some of the stuff they're reporting. Not saying they're all bad. I have invested overseas. Hell, I live overseas. But for the sake of this, I want US only because I have specific strategies in mind. And if you can go down here, you just look row by row, like what are you looking for? Think about it. If I'm going in to trade, I have a certain set of criteria versus when I'm going in to invest. So let's say that I actually want to find a good trade. So the first thing I want to look at is that the trend is your friend. So if I'm looking to go long on something, right, I'm going to go in and say, okay, let's find something that's trending up. So very easily I can go in. So has something gapped up recently? Let's go to this first tab of performance. Let's look at something that is up. Let's not go today. Let's have something a little bit more sustained. Let's go week up. That already whittled us down to 1,400. And I'm just gonna keep going through here, building what I want. If I'm trading, I also want volume as well. So I'm gonna go in, I'm gonna say, okay, average volume at least over 500K. So I know I have liquidity in the trades. And me in particular, when I like to trade, I tend to trade options. So I'm gonna go here and I'm gonna go to option short. I'm gonna click optionable. Cool, we're already down to 227. I hadn't even really set any crazy parameters inside of here, but let's keep going because we also want quality companies and not any trash. So for me, if I'm trading, I want a sustained trend. So I'm gonna look at moving averages. So very quickly, I'm gonna go 20-day moving average, going above that 20-day moving average. All that means is that in the past 20 days, we're getting a uptrend of the particular stock, right? I'm gonna do the same thing for the 50, price above the 50. Cool, now we're down to 148. Let's say, hey, maybe I'm looking for a longer term trade. I can go price above simple moving average 200 as well. So that's starting to whittle us down a little bit more. And let's get even more granular, because when I'm trading, I'm not a penny stock guy. Like, I've been burned in the past off just going on penny stocks and be like, hey, if this thing if they approve it's gonna go to the moon, let's not do that. Let's go and look at some stocks and let's say, okay, cool. The price is gonna be, for the sake of this, if you don't have a huge account, let's say the price is gonna be above 10 bucks. Cool, so over $10, gap up, week up, and we have a trend going up. And if I wanna confirm that these things are actually working, I can quickly look at the charts and I should see some trending stocks here. And we can see that, right? But here's the thing though. When you're going in and you're trading, you wanna have a trend, but you don't want it to be overbought and on its way down. So without even going in and doing too much technical analysis, I'm gonna quickly go into the RSI. I wanna make sure that something isn't overbought. So I'm gonna go not overbought here, and that knocks it down to 33. And what this tells me is that, yeah, we are in an uptrend, but there's still room to actually go into a particular stock. Like, it hasn't hit a double top and gotten to a point to where it's exhausted and it could be about to fall on us in a technical sense. And that knocked us all the way down to 33 stocks that quickly, just by going in and doing those things. And remember, we can continue to go as deep as we want to go with this. And I'm actually going to go a little bit further, because for my companies as well, like, I don't want to mess around with these BS companies. I want to go in and I want to say, hey, let's look at the market cap of companies. We're not going to go mega in this case, because we know that a lot of those mega caps are going to be a little bit out of the price if you are a beginner. So I may go, okay, let's go large to mid. So if I go large, boom, here I go straight away. I have some companies that have a ton of volume. They're in an uptrend, but not so high to where they may be about to fall down again. And there may be room for me to get a bullish trade. And it knocks it all the way down to 9 companies. And then remember, when I was over looking at that heat map, I knew that technology was up. So I'm like, okay, well, what's a technology company? We got Integris here, they're semiconductors. So, Nvidia's up by a bazillion percent this year. I may want to investigate Integris a little bit deeper here. Same thing, we got GE, we got Hartford, Juniper, you get the point. It's only 9 companies. SMCI was a good runner for me as well earlier in the year. So there was a pullback. There may be another opportunity for me to enter on SMCI, but now we have to go in and get a little bit more granular there as well. So I look at ENTG, and I'm just gonna, without even looking at the financials, because I've already set up some fundamental parameters there, I'm gonna go, okay, what is the analyst saying? I take it with a grain of salt, but what do they think? Analysts are saying it's a hold. A lot of people are saying it's a buy or neutral. And then there's a lot of stories here. We're not gonna go read all of them, but look at this. Silicon sleepers, 3 non-NVIDIA semiconductor stocks to own now. You can click on that and go, why is that? Right? But we're not gonna spend all day going through all of that stuff. I just wanted to quickly show you how to drill down and find these companies based on what you're looking for. Remember, this is just a trading thing for me, but I want to go in and show you a few more. And for instance, what if I want to trade and I want to find companies that were actually down for the week? So let's go performance week down, performance 2, let's go quarter up. And now we got some other ones here that are down right now for the week in a pullback, but they've been doing well for the quarter. I can even change that for the year up, and I can mess around with a float short as well to see some that may be ready for a breakout. We won't look at that in this particular screener, but that gave me some other opportunities. And if we look at these charts for these companies, we can find out very quickly what's happening with them. So cool. I can see right here, they're pulling back. So most of these should have a pullback. So it's my job now to figure out why they pull back and make a case for why they may or may not be good trades for me on a pullback at a discount. So that's just very quickly how I set up some trading screeners, not to give me the answers. I just want to have a starting point, right? I look at the top and I'm like, okay, what sectors are really trending? And then I set some filters and go, all right, what am I trying to do right now? Am I trying to trade? Here's the set of filters that I'm looking for. Do I want to find something in the pullback I can get for cheap and ride it up to a certain supportive resistance level? Or do I want to find something that's in a trend and kind of jump on the back of that after the market messes around with it to see if that trend continues? Those are the 2 filters I look at. But if you actually look behind the scenes here, I have all these things built out that I've already set up with all those different tactics. Like I have one here where I'm looking for the next NVIDIA finder. So what am I looking for my next NVIDIA finder situation? I'm going in, I'm like, okay, large cap company, current ratio is over 1.5. All this means is that it's a company's ability to pay its short-term obligations, its current assets divided by current liabilities. So this tells me how liquid a company is and if they're having trouble paying debt. So that's super important. They gotta have their stuff together. I need to have earnings per share growth over the next 5 years of 20%, sales growth the next 5 years over 20, performance year up 30, and then debt to equity needs to be under control as well. And you look at that, like just with those 1, 2, 3, 4, 5, 6 settings, I could have just went here, but those 6 settings, I've already narrowed it down to 4 companies. And I actually talked about this one in another video. It's a Chinese company, so it scares me, but holy crap, there is some growth there. I know a lot of people who've made a lot of money with CrowdStrike as well. Remember, CrowdStrike is cybersecurity. So if I understand the current ecosystem, I'm like, okay, well, I know that there's been a lot of cybersecurity issues all over the world. If a company is in tech and invested in that and the leader in cybersecurity, they may be worth investing in as well. My only job now would be to find a good opportunity. And if I quickly click on CrowdStrike, first thing I look at is the PE, which is insane. So this is telling me that potentially CrowdStrike is overpriced, and I can even look at the chart and see that it's gapped up all the way up here to all-time highs. And then I got some area down here of support and resistance where personally as a trader, I may be looking to get this at, you know, the 340-ish range or down to 300. I don't know if that's going to happen. If I believe in the company, I could jump in, but I need a pullback of some sort because it is running way too hot for me to want to invest in it. If I look at what the analysts say, it's like outperform, equal weight, overweight, outperform. So they have their price targets here as well, set 330, 334, 355. Right now it's trading at 390. So it's well above what those price targets are. So I really got to believe in the company and to jump in now. And this is one thing that I tell people, don't get too excited about these companies at these prices because they may or may not come back down. Like I'll give you an example. Like with CrowdStrike, I know that they're a great company, right? And they're the industry leader in cybersecurity. So I might go in on something like CrowdStrike and say, you know what? I'm willing to take that risk and I'm going to invest on a leap long-term option in CrowdStrike, no matter what the price is, because I know it has room to run as an industry leader, but you have to know what you're doing to make those decisions. For the average person, when you see a company like this and it's just trading this hot, just wait for a pullback or find something else. But that's up to you, right? It's not financial advice, but you got to really understand these companies, and CrowdStrike is one to understand. So I would have to have a good hard look to decide whether or not I want to jump in right now or wait. If I was looking for a quick trade, now's not a good time for a trade because it's too hot. But if I was looking for just a long-term investment, I don't really care with this price because I'm investing years out. And I know it's gonna go above that eventually, so I would just buy a leap option or something. So it depends on what my strategy is with the particular stock that I'm looking at. Same thing here, I got so many different ones in here. We'll be here all day, but let's go 2-year leaps strong. Same thing, I said if I'm looking to trade something as a leap option, I have to have all these financial and fundamental ramifications on it. So everything, I want EPS growth the past 5 years, positive. I want next 5 years positive, sales growth positive. You get the point. Everything needs to be on the positive, on the fundamental side. I even want to pay in dividends. Let me know they're a stable company before I'm looking to do a leap. Institutional ownership is huge as well. I want to know that big money is behind them. One thing that I actually didn't show when we were inside of there was held by. So you see this little held by area here? This tells me what big funds are holding. So anything with the V for the most part is going to be Vanguard, which is big money. So I know that if Vanguard is holding it in several of their different funds, we're probably in good hands. So speaking of Vanguard, for a lot of people, if you're in here and you're like, okay, this stock stuff, and Michael went through and he rapid fired off his screeners on what he's searching for, and it's a bit confusing to me, that's okay. That's actually a good thing, because I want beginners to start off, you hear me talking about this all the time, just invest in those funds, man. The key thing for you as a beginner is just to beat inflation. You shouldn't be chasing all these crazy stocks. I'm gonna always show you some stocks I'm looking at. I'm gonna show you how to find them. That doesn't mean you have to chase them if you don't understand what the hell I'm talking about. Ask me the questions to clarify these things to really get an understanding. But the safest thing to do, to be honest, is just to jump into something like VOO, which tracks the S&P 500, and just go in and say, cool, I wanna go in, I wanna invest in the Vanguard VOO ETF. I know it's tracking the top 500 companies in America. If they go bust, the world goes bust. Here as well, I can go in and say, cool, their returns have been great. They've been beating inflation since inception, which was back in 2010. So since inception, 14.44%. Past year, 29.85%. The market's been going crazy. 10% year to date, quarter, 10%. We get it. All of that is beating inflation. And then a cool thing about looking at this stuff, like, I want you guys to do your homework, right? Like, don't keep coming to these people like myself and others asking, what should I buy? Like, this is not hard. Like, if you can tell me all of the Targaryens and their whole family tree in the House of Dragon, you can freaking look at Vanguard and figure out whether it's worth investing in or not, and if it'll beat inflation. It's super easy. People just don't want to do the work. But going in here, one thing is, well, there's so many different ways to know what the market is doing. You can go to something like Vanguard and you look, oh, the top 10 largest holdings, a percentage of total assets for the Vanguard fund that tracks all the S&P 500 is Microsoft, Apple, Nvidia, Amazon. Well, what does that tell me? It tells me technology is having a time, because this fund is weighted more for the outperforming sectors or stocks in said sector. So when I look at this, it tells me exactly what the heat map tells me. It's like, I can see that huge square for Microsoft. I click back for you guys with short memories. So look, boom, there's Microsoft, there's Apple, there's Nvidia, there's Broadcom. I'll go back to Vanguard. Oh, ta-da. There's Microsoft, Apple, Nvidia. Broadcom's down here at 1.3%. And it even tells me the sector diversification is information technology, almost 30%, financials, healthcare. Remember, utilities wasn't doing too hot. They're weighted way down here in the VOO stock. So without doing anything, you can easily go into your broker, type in VOO, and just dollar cost average. Pay yourself first. Put your money in that first. I'm always gonna have a baseline of VOO, and then I'm gonna do my granular research to find other opportunities. But hopefully all of this made sense, right? It has your brain really turning like, okay, I look at the big picture. I can see what's happening in the market. I go in and I want to go a bit granular, and I have these different things that I set up in my screener based on what I'm trying to do. And most of these screeners, you can just click on it. It'll tell you exactly what it is if you don't understand PB and PS or whatever. But if you really look at it, you can get it. It's not rocket science. I promise you, you guys can do this. I'm trying to help you win out here, because the thing that we want to do is be sure that we're leaving more behind for our families than just that when we die. That is super important. We're trying to break these generational financial curses, and it starts with you watching this video. You're gonna be the first millionaire in your family. I can promise you that. And that's what I'm here for. And that's why I want to teach you this investing game and this whole economics game. Like, it's not as hard as you thought. And if you look at some of the links below, I have all free stuff, free cheat sheets, free options, books, all kinds of stuff. Down in the link, click it, sign up for the newsletter. I'm gonna always be sending out stuff, keeping you up on game, letting you know what stocks are out there, but also letting you know when videos like this drop as well. But until next time, it is your boy, Michael T. Ragland. I am out. Stay blessed. Peace.